Good afternoon, guys, and welcome to this debrief. It is Tuesday, the 18th of April. I hope you've all had a good day trading. Let's get straight on into it. Today, I'm going to be bringing you predominantly a momentum play, which ties in with a bit of structure and sort of understanding positioning and just a general theme of how the market can be positioned one way and then how it quickly liquidates the other way. So without further ado, let me just run you through the charts quickly. On the left here we have this is a Bund 3-minute chart here. A 3-minute chart. I've kind of condensed the main bit of what I want to show you guys into this small area, which is why, as you can see, it's a bit blocky, but the main area that I want to kind of focus on is in terms of understanding the importance of the open here. So probably shouldn't really draw in red here, but the open and this kind of spike up here is what I want to focus on, understanding how it kind of pans out, and if you understand the great positioning of the market, how you can then, and you're prepared for when it does rotate through certain areas, how you can use it to your advantage. This is here the initial balances I've marked out in the blue lines for you guys, so you understand the move. And then this is the liquidation sort of move I was talking about after having this condensed block in here. And on the right, I have a 15-minute Bund chart, and this is the area I want to kind of focus on. So you have this kind of initial inside bar. You have a test outside. You close back inside the main bar. I mean, it's not necessarily a out-and-out inside candle failure, but it just kind of gives you something to lean on, so you understand that you had this. There was a ledge here that got taken out at 68. We kind of poke above it. There was no initiative at higher prices. Then we rolled back inside the body of the candle, which instantly but just gives you something to lean on in terms of bearish signals and how we can kind of position ourselves accordingly. And then this is obviously the follow through we get. This was the really bad low from Friday, which we didn't take out on first test, but we can eventually come down and trade through. But without further ado, guys, let's get into the ladder, and I can explain to you guys what we're saying. So, like I said, let me just pause this briefly. Like I said, it's a momentum type play. It's a futures / initial balance liquidation trade. It's an aggressive continuation trade in terms of you're looking for momentum, you're looking for follow through, you're looking for initiative. The environment we're looking for is kind of high volume / high velocity. You're looking for sort of a lot of two-way trade, a lot of back and forth price action, just because you can have clear kind of entry and also exit when you do begin to trade through certain areas. And then the risk management on this trade is always relatively tight, guys, sort of 2 to 5 ticks. And then, as always, it's level dependent in terms of risk management, guys. But for me, my initial first target was that we had a VPOC down at 48. So as you can see, I'm starting to scale out some here already, around 48. And then we had that poor low down at 39s. But just so you can you're prepared to scale out areas if price action isn't there. And yeah, you don't want to get carried away unless we start trading through, say, 49s, 48s. Without further ado, let me just get into how do I get back to using this. Right. Okay, guys, so as you can see here, it's 7:58. We're just over a minute away from the European cash session opening up. And this is, we had the initial inside candle break at 62s, and after pressing higher, take out the initial poor ledge at 68. No initiative at higher prices. Then we've rolled back into this body of the candle. So it's just understanding, guys. So you have 60s here, which was the open, right? And for me, when you have trades like this and you have a really tight block, in particularly on an initial balance kind of future session, it's a really important area to kind of defend, or it gives you a signal as to, so we've had the initial open, we had a test lower, we then moved higher, and then the bulls couldn't hold above the open. Now we've rotated back through 60s. In theory, if this sell side is going to continue in this kind of condensed trade, we're going to move away from this block. We shouldn't see trade back above 60s. So when you're you're kind of short prior to the cash open, and then you're looking for, you don't get carried away selling down here when you can kind of I mean, obviously, if price was to pick up and we see follow through, you can get aggressive, but 60s is your real line in the sand as to getting out the trade. So, as the cash opens up now, we'll see how we start to trade. So, because initially it looks quite aggressive, you're seeing real aggressive size down here. As you see, I'm hovering over the offer, ready to sort of clip into lower prices and get quite aggressive on this trade. But as you can just kind of see, so you've seen how someone's just we've just absorbed about 1,000 contracts at 57s, and notice there's no follow through at 6s, and then all of a sudden 8s gets the offer gets pulled, and small sizes lifting the offer, and again you see 9s, and now you're seeing we trade 60s, 61s. So notice how the price action here changes. You instantly see two prices get taken out. If you had a footprint chart, it shows you a lot better in seeing what actually clips down that price. But then again, so you've just seen someone between 60s, 61s and 60s take out two prices, and we're now trading back down 58s, 59s. And again, you just kind of now, this is where you want to see aggressive seller now step in from these prices. So you want to see a firm reload and then clipping down from these prices. So as you're seeing here, as long as someone's, at the moment, I'm happy to, the way we're trading, I'm happy to see a lot of reloading and a lot of absorption. Just the way the bund's trading, it's quite sticky, so you're not going to kind of get follow through instantly, guys. You're not going to get paid out the second you get in on a trade. But as you can see, as long as you kind of see, you have a clear risk and understanding of how this trade should pan out. I mean, your initial entry 62s, you've now added 59s, 60s is the open. You want to see kind of follow through from these prices again. So you've seen someone absorb, over 1,000 contracts between 58, 59. Again, you're starting to see this chopping around. Note how we then see you see how we trade 60s and instantly clip down 59s. And again, we're kind of accumulating it back in this block sort of thing. You maybe start to scale out back above, slowly start to scale out above 2s, 3s. Then, I wouldn't want to see, 2s and 3s start to go bid sort of thing, because obviously then you have people caught short aggressively on the other side of the open. So just watch how the price action changes. Once again, after so again we have that another aggressive seller clip down, 558 lots trade 58s, reloads the bid, clips down 7s. So you've seen someone be aggressive at 58s, reload the offer firmly, and then clip down 7s. So instantly you're kind of feeling that this trade's it kind of starts to materialize a bit better now. You're seeing that passive seller absorb lower prices, step down, absorb lower prices, step down. He's had someone accumulate between 59s and 61s, and now it's to pay up lower prices. So just watch how we trade now. Is like I was saying, guys, the 48 was it? Sorry, 48 was the VPOC. Just watch how we start to trade down towards these prices, and we leave this block. So you got the initial balance low here at 54s. So understanding, look how heavy the offer is in terms of the reloading, guys. Oh, pardon me, excuse me. Notice, we couldn't live. We had that guy 57s, 58s was the second initial really aggressive hit down into the bid, and then just notice how any bid, anyone lifting the offer is just getting eaten up, getting reloading, clip and reload. So at the moment we're kind of getting a lot of one tick extensions in the bund, and just notice how we trade around here. I mean, don't get me wrong, I'm not expecting you should fade every one tick. It's not fade or cover every one tick extension move, but just see how you need to be patient in understanding when it so you've seen it down tick 53s, you want to see it trade 54s, how it kind of auctions around these prices, 55s, 54s, before then starting to scale out, if you are going to start scaling out. So again, you're going to be patient here, waiting for, your clear target down here, 48s. And like I was saying, guys, I don't mind seeing size at the moment lifting and absorbing prices. It's just the way that it's trading. And you see how it just kind of clips down and goes instantly offered. You wouldn't really get filled clipping 52s, 53s. And you see how we go offered at the low. We trade 500 lots at the low, instantly clip down again after lifting freeze, clip down again. So now we're again 52s. We're reloading 52s, and then looking kind of for sort of. Like I always talk about, guys, that we've got this kind of gradual stepping down in lower prices as we kind of now. So we're exiting this block. We've had this big auction block. We've rejected the open, rotated lower, and now we're starting to, the price just kind of starts to pick up again as we sort of trade lower and gets more aggressive. I mean, don't get me wrong, guys. Like, it's all about understanding where you've seen the reloading and where you don't want it to see it come back through again. I always talk about this type of trade management, and I know it must get, repetitive hearing it, but like, guys, it's just understanding you've got the clear setup in terms of idea and clear plan as to how you want to execute this trade. But then if you're not seeing, you're not seeing that this sort of like huge reloading here on the offer. Notice the bid being pulled again. It was 53s, 54s. Where like if we are to roll lower again, we don't really want to see prices back above 54s. We shouldn't really have to retest this auction block. We've traded out this whole area so well. We've rejected the open, pushed lower. I'm still happy to sell below 54s, 55s if there's price action which accommodates it. If you see what I mean. We shouldn't have to retest this. We shouldn't have to trade back through this area. You know what I mean? If we test back inside, start to accumulate, and then roll higher, then that's kind of a red signal as to of accepting back inside the block, and then we can just rotate the full area, which we do actually eventually do in the day. But understanding that if we do, say, rotate back inside, not instantly, but have strong rejection, then roll lower, then we can kind of continue being aggressive. I mean, don't get me wrong, it could have been really easy to get carried away here in anticipation of these 41s, 39 area being taken out, but just kind of like I say, if you're prepared in executing this initial trade, I mean, you can happily scale out of this area, see it pull back, and then say re-enter a short again, or position yourself however you want to, and be cool with that. Or you can even see it roll over again, come down to trade 41s, 39s, and then you can just get short again, guys. I mean, don't get me wrong, depending on how you want to trade it. I know some people who were short in here and then were taking scratches and covering for small winners, which is totally fine. Just in terms of how you want to trade the setup and how you expect it to trade through, what type of move you're looking for, what type of market conditions you're actually working with. All these things, different things matter, guys. So as you see, it's getting quite aggressive here into 48s, and just notice how. I mean, like I said, this is why I want to scale out of my clip like I've done so. I mean, it gives me flexibility now here, actually saying, right, so we down tick 47s here, so 48s trade, down tick 47s. I mean, don't get me wrong, I'm happy to scale out on any sort of uptick here, any sort of aggressive up clip. I'm going to look to scale out. If, like I was saying, if we skis lower and start to have a bit of sideways below, say 48s, below this area of volume, and then we rotate lower again, then I'll just have to get short again and trade out. But other than that, I mean, just the idea of understanding. So, like I said, I'll draw it to you really quickly. So we had this really tight auction block in here. We had this open come in at 60s, and this is the initial band is low, initial band is high. This is an Axia to the tick drawing, guys. I know we only did kind of two bounces off each side. But say as we come back into here, and just understanding that this level is such a dividing factor in terms of understanding. So you've planned the 15-minute higher time frame structure. You then seen it rotate back down, fail on the kind of dividing line, and then just sort of, like I was saying, so we have this block. Once we start to trade away, guys, I mean, don't get me wrong, sometimes you may want to see it rotate up and then roll over, but you can't always get paid like that. So, like, for example, in here, you wouldn't have got paid for waiting for a retest. I mean, you would have had to have sold aggressively 54s, 53s at market kind of thing. So, I mean, that's why, the way I like to trade, if I can kind of be positioned on a higher time frame and understand the structure and planning of the trade before I want to get initiative, like before I want to get aggressive, excuse me, then I don't feel so, not guilty, I don't feel so bad chasing like low ticks and stuff like that. I've kind of got my cool position on in here. I mean, don't get me wrong, I sat through this for, a good 5-6 minutes. It wasn't a nice trade to sit in, but once it did roll over and we had that retest back to the open, we bounced off the IB low one last time, pushed into the open, then rolled over after seeing the price action I liked. And you had all this kind of all this accumulated positions in here, kind of liquidate, and we had that flush down, that really nice flush down. That's what I was looking for, guys. I wasn't looking for it to completely hemorrhage through that bad low. No matter what your kind of daily view is or how you feel it should trade, where it should close, for example. I mean, you kind of, like we're saying, the way that I trade and the way most of us trade, I think, is kind of, just you only need to have a couple 5 to 10 tick winners a day. If you know, maybe it's obviously depending on conditions, and that's all you need to build your day on. I mean, other than that, if you're trying to, like for example, like if you're trying to then get really aggressive in here, down below 48s, like I was saying, say if we had this move and we shanked, say when we had this block, which we then exit, and then we start to rotate lower. This is the VPOC in here. We have VPOC. And I start to cover. I cover all my position. I've covered some in here, and I cover everything in here. And then say we kind of get a bounce and maybe a bit of sideways, and then roll lower. Then sure, then you just have to reposition yourself on this structure here. But then, you can't get aggressive just on this price action based on the fact we're below VPOC here at 48. I mean, don't get me wrong. In some market conditions, yeah, I mean you can get paid for doing that, but you want to see acceptance in here and below value. I mean, you've seen acceptance in this block, and then you've seen us reject it and roll away. So then you want to see acceptance in kind of, there's no sideways structure to work on here. You just kind of have a vacuum. I mean, this whole move here can be retraced, and it does retrace the whole move. And like I was saying, you have, and don't get me wrong, like I myself, gave back all this money in here afterwards when we had this kind of two-way trade area in here, but instead of having kind of not instant rejection but a failure to trade back into the block and roll over, we had a trade back into the block sideways, and then we had a poke higher kind of thing, and you just traded out the whole block because this whole area is just traded out. It doesn't need to spend time in here to auction out. It can kind of just accumulate. You had someone accumulate, and then just push higher, and it sucks everyone into getting short in here, feeling this is good risk reward. You've just seen how aggressively sold off down here. You've seen, you've got a really bad low. This area, you should kind of knife through volume. But yeah, I mean, without trying to get too technical with everything, guys, I mean, I hope that kind of could have been of some use to you today.